Bitcoin is a religion. That is positive and negative. It implies that the zealots will pour enormous capital into the crypto world. It likewise leaves them ignorant concerning proof that scrutinizes their belief system. In this video, we will see Michael Burry's beliefs that the end of Bitcoin is closer than you think. So let's begin. Who is Michael Burry? Michael James Burry is an American investor, hedge fund manager, and physician. He's the founder of Scion Capital, which he ran from 2000 until 2008 before closing it to focus on his personal investments. Michael Burry initiated his position in Meta Platforms Incorporated during the first quarter of 2022 with 80,000 shares valued at $17.78 million. Let's look at the reasons he gives for the impending downfall of Bitcoin. 1. Bitcoin is a revenue-free bubble. Bitcoin offers holders no assumption for future profit. As a result of the shortfall of any normal profit, switch weakenings, or buybacks that would give profit to the holders later on, the worth of Bitcoin will become zero once diggers are terminated. Contrast this with putting resources into an effective beginning phase organization that develops over the long haul and ultimately delivers investors a profit once it turns out to be sufficiently enormous to do such. This organization has genuine world utility in the meantime and offers immediate support to clients, whereas Bitcoin is yet to offer any significant true utility other than expanded hypotheses. Clearly, the decentralized record innovation at the center of Bitcoin is something of gigantic and progressive worth. In any case, this reality offers no upper hand over the various other digital currencies, with a laid-out market of certifiable trade and far more prominent future profit potential for holders. There are numerous tokens in the crypto space at this moment that could exceed and supplant Bitcoin before long. 2. Ethereum could destroy Bitcoin. Ethereum is a resource with tremendous certifiable potential, as it gives a stage to dApps and other DeFi administrations, as well as acting as a brilliant agreement go-between. It has a functioning use capability, to be specifically supplanting the wild cluster of outdated bookkeeping and banking administrations that cost uninvolved clients of the TradeFi framework almost $3 trillion each and every year. Ethereum presently accumulates roughly 0.05% of all possibly capturable monetary profit accessible in the traffic biological system. Assuming we accept that it's fit for catching only 0.5% of complete fiat income, then its cost would be generally $40,000 per token. As opposed to Bitcoin, this would be done by means of a true use of its utility, not simply ready to be acknowledged as a supposed store of significant worth or as a legitimate vehicle of trade. 3. Bitcoin's real value is artificially inflated. The disappointment of Bitcoin turning into perceived cash has been veiled by the expansion in the cost of Bitcoin. This has made an adequate number of benefits for an enormous number of individuals to hop on the promotion train of Bitcoin well in front of any certifiable utility being given. Any expansion in the cost of Bitcoin has very little to do with its authentic utility. The developments in Bitcoin's cost are just bogus expansions situated in future hypotheses that furnish fans with enough financial evidence to make a ton of uproarious clamors about its future. 4. Bitcoin will fail as a currency. Cash, by definition, is a proficient, stable trade of significant worth that tracks a weighted bushel of labor and products with the least mistake. It requires roughly 10 minutes for an exchange to be approved on the Bitcoin record. How might Bitcoin hope to contend with MasterCard or Visa on the off chance that we need to stand clumsily in a bistro for 10 additional minutes since we're crypto fans? In the event that Bitcoin or some other cryptographic money, so far as that is concerned, hopes to be viewed as a substantial installment framework, it should be both quick and secure. In this way, for individuals to have the option to consistently purchase merchandise with a cost designated in Bitcoin, they should likewise have a payment that is fixed in Bitcoin. For a business to pay compensation in Bitcoin, that business should get income that is likewise fixed in Bitcoin. Besides, to make and fabricate products that are sold for income in Bitcoin, they should have their overheads fixed in Bitcoin. The adaptability issue causes demise twistings. These were the reasons that could end up being impetuous for Bitcoin's future destruction. It gives a structure to financial backers and crypto enthusiasts to see the direct impact by which Bitcoin could turn out to be just a burning hot ruin in the future, as predicted by Michael Burry. That's all for this video. It would be great if you drop a like and share the video. Thanks and goodbye.